All right. Hi, everybody. Welcome to today's panel uncovering the global crypto and blockchain investment landscape. My name is Christine Hall, and I'm contributing writer to Crunchbase News, and I will be the moderator for today's panel. I'm going to have all of our panelists go through and give a quick introduction, and we will start with Tom Schmidt.
Hi, everyone. My name is Tom, and I'm a partner at Dragonfly Capital. We're a crypto venture fund that specializes across the US and China. Before Dragonfly, I was head of product at 0x, which is a decentralized exchange protocol. And before that, I was a PM at Instagram for about 3 years.
Great. Brooke?
My name is Pollack. I'm the managing partner of Hutt Capital. We're a blockchain venture fund-to-funds and direct investment firm. So we invest in blockchain-focused venture funds as a LP, and then we also invest in leading growth stage companies and the equity of those businesses.
Thank you. Curtis?
Hi, everyone. I'm Curtis Spencer. I'm the co-founder and managing partner of Electric Capital. We're a venture fund in crypto. We focus primarily on layer ones, as well as picks and shovels businesses in the space. Before crypto, I was an entrepreneur for many years. Most recently sold a business to Facebook. Excited to chat more about crypto today.
Great. Thank you. And Zachary?
Yes, I'm Zachary Zefferati. I'm the CEO and founder of Dalma Capital. We're an investment bank and asset manager based in Dubai. We're a multifaceted asset manager, but we have dedicated a considerable amount of our portfolio and investment banking capabilities to digital assets and crypto. We fund in 2016 called the Alphabet Fund. We manage now 5 different strategies. We also have issued digital securities with Banco BTG Pactual and a few other partners globally, which remains a big focus area for us.
Wonderful. Thanks, everyone, for being here. So we're going to kind of jump in with the global nature of crypto. And the first question that I wanted to pose to everybody was, other than the US, where are kind of the most active regions for crypto? And I don't know who'd like to start. Maybe Zachary, since you're in Dubai.
I mean, being in Dubai, it's a great place to run a global book. I mean, we do, when we run deals, for example, when we unfortunately participated in Telegram, we had clients from the West Coast of the United States to the Far East and Australia participate. And as part of our order book. So it is truly a global asset class. We finance miners in Norway, in Iceland. We deal with mining equipment providers in China. So yeah, I'd say it's truly a global asset class. It is truly borderless. And it's a pleasure in a time zone where you can cover the entire world.
Great.
Yeah, I mean, we invest on a global basis, and I'd say kind of 3 core regions we look at are, North America, Europe, and Asia. And, it's a much more global landscape than the overall venture capital world. You have a larger share in both Europe and Asia versus the traditional tech world. At the same time, given our focus on venture capital, the capital is much more focused in the US. So you have an interesting dynamic where it's a very spread out global landscape, but the venture capital money is much more in the US. There's a bit of a gap in both Europe and Asia in terms of opportunity set versus, capital, which I think presents an interesting opportunity for investing outside the US as well.
Yeah, I agree with most of that. I think for us specifically, half the team is based in Beijing, and we focus very exclusively on China within Asia. I think, obviously Korea and Japan had sort of spurts of activity in sort of 2017, 2018, but those have largely, died down since. And sort of the mental model that we use for thinking about this is, I think while a lot of the great entrepreneurs, all the great tech is still coming out of the US and Europe, most of the adoption, most of the traction is happening in China. Most large mining pools are in China. Most of the top exchange volume is coming out of Chinese exchanges. And increasingly there's increasing consumer adoption. When we look at DeFi, which is, I think, one of the more interesting trends, and I think we'll get to a little bit later.
Yeah, I do think it's pretty interesting how Silicon Valley tends to spin out a lot of the technical innovations in crypto, but then most of the usage tends to be worldwide. I think Zach brings up something interesting around proof of work, still decentralizing the space even further, because people are trying to build miners wherever there's cheap power. And that tends to not be like San Francisco, right? You're going to be in Norway, you're going to be in Iceland, you're going to be actually in the eastern part of the US where you might have access to cheap water power, or in Oregon, for instance. So there's really a lot of ways to play. One last place I would add is Berlin is actually a pretty interesting spot for sort of the more crypto native, like cypherpunk part of the ecosystem, like that cares about privacy. And so we do see a lot of interesting technology come out of there as well.
Yeah, and you guys kind of good segue into the next question about kind of the differences in investment landscapes of those regions compared to the US. So since, a lot of the capital is, sort of flowing into the US, what are some of the differences in other places, and where kind of the opportunities lie?
Yeah, I mean, so for us, when we look at Asia in particular, it's a much more liquid market than what we see in Europe and the US. So there's a much greater preference for liquidity and trading strategies. A lot of usage of crypto exchanges and retail use in that market. Versus what you see in the US and Europe, at least from our perspective. And likewise in the US, you have a very mature financial system. The inherent benefits of crypto are maybe lesser than if you're in developed markets. So the opportunities you see here are very different than maybe some of the more on the ground usage based opportunities for crypto around daily payments and daily usage that you might see more emerging markets.
Yeah, I think we touched on it a bit earlier. I think we touched on it a bit earlier, but yeah, we have sort of the somewhat perspective where most of the adoption, most of the traction is happening in China, and so therefore, a lot of the top exchanges are coming out of there, just looking at volume and looking at usage that way. And there's sort of another interesting component where sort of standing with local politicians and sort of favoring government matters a lot more compared to the US, where or Europe for that matter. But I think when we still look for teams building great tech, either on layer one or new protocols, or it's still coming out of the US and Europe.
Yeah, and I would tend to agree that we see the best primary market opportunities coming out of the US and Europe, but what we see on secondary markets that can be quite interesting, particularly again liquid crypto trading. One focus area for us has been arbitrage, and arbitrage book in multiple currencies, multiple countries can be quite a lucrative strategy. For example, in Indonesia, in trading in rupiah, you'll see the hedged Bitcoin trading at easily a 5 to 10% premium. I mean, it was quite prevalent in Korea. So being able to run a global book trading liquid cryptocurrencies with exchanges in different markets and in different fiat currencies can also be advantageous for somebody looking to maybe take non-directional bets or exploit arbitrage opportunities across different countries. You just need to double.
Yeah, the offshore oh, go ahead.
Sorry, finished.
Yeah. I mean, the offshore onshore component here is pretty interesting, and I feel like one analogy here that I've been using a lot is like we're kind of like the Napster era here, where there's a lot of U.S. persons pretty much trading offshore using VPNs, and I think the U.S. needs to set the stage for like the building of a Spotify here, where like U.S. participants don't have to jump through a ton of hoops to participate, because the U.S. is still like the largest capital market in the world. And when you look at the trading opportunities within the U.S., it's pretty limited to like spot markets on like Coinbase and Gemini, whereas like offshore, so much exciting stuff is happening. Like BitMEX aside, I mean, you look at like FTX, Binance, just like the ability for them to add new asset types. The U.S. needs to catch up here.
Good point. Good point. Yeah. So let's kind of jump into that with, sort of the talking about funds dedicated to the area. In my research, I saw that there could be what you might call a like crypto bear market in like 2018, 2019. And as a result, there weren't as many kind of crypto fund launches. Would you say that there's been a recovery in like 2019, 2020, or is there still kind of some hesitation to launch new funds or dedicate new funds to kind of the crypto or blockchain areas?
Yeah, there's definitely been a recovery. I think when you look at what happened in 2017, I think a lot of people FOMO'd into the market and they didn't really understand what they bought necessarily. Like I think there was a lot of hype. But a lot of the institutions that like we've talked to, for instance, they were studying the space in 2017. They didn't deploy then, but they were putting in the work, which I think is actually refreshing. Like it's much better to have a long-term oriented LP that's actually like studied why this is important. And usually it starts as like the Bitcoin money domino is like you kind of understand Bitcoin first, then you start to see things like Ethereum and like why scalability matters and DeFi. And I think that's like the right on-ramp as opposed to like, whoa, this asset class is going crazy. Let's buy in, because that didn't end well for a lot of those people.
Right.
Yeah, I mean, I can speak to the venture side, given our focus, less color on the hedge fund side, but I mean, we saw pretty healthy fund creation, even in 2018 and 2019, to be honest. So I wouldn't say that it ever necessarily slowed down, maybe different for hedge funds, but it has been a little slower this year, I think, just because of COVID and, the troubles of, let's say, starting a new fund during that time frame when you can't travel and meet folks is a little, a bit of an issue. It has slowed things, but that's not, not specific to blockchain and crypto. I think it's more other market forces that's caused that.
Yeah, I mean, I agree with Curtis, where I think in 2017, there was sort of an anomaly where, everyone and their cousin was starting a crypto fund because they saw everybody else starting crypto funds and, making a lot of paper money in crypto. And obviously it's not sustainable. And so that's, I think, why we saw a bit of this collapse in 2018, 2019, when, sort of reality set in. But I think, we are seeing sort of a mini bull market right now in crypto for a number of different reasons. Not even talking about macro tailwinds, talking about sort of DeFi being a catalyst for this current run. And so we are seeing, I don't know if comparatively more, but just anecdotally, a number of sort of smaller mini fund spinoff that are specifically looking at DeFi and a lot of these sort of user operated protocols.
Yeah, great. And so given that, there's, still it's a bull market, what would you say about kind of the like the deal flow in terms of like deal size and number of deals being done kind of in the past year? Brooke, do you want to address that first?
Sure. I mean, I guess I don't know the exact data for this year. If you look at last year, I think there were about 620 blockchain venture deals that got done, about 2.75 billion of invested capital, which sounds like a lot, but that's, let's say 3% of the overall venture landscape overall. So it's a pretty tiny piece of the overall venture world. I know if you look at the data for this year, at least in the first half, it was definitely slower. I think largely due to COVID. I think it picked up a bit in Q3. So I imagine, the year-over-year growth on Q3 numbers looks pretty interesting. But I don't know the exact data for this year, how it compares to last year.
Yeah, I don't have any direct numbers, but anecdotally, I've been seeing a lot more early stage investment opportunities. And I think a lot of that is there is a feeling that the market is hot right now. And going into the election, there's a lot of uncertainty. So people are feeling like I might as well raise 18 months to 24 months of runway here. While people are like, whoa, the market's fine. Like, let's invest. Because in March, right, everyone was like, no, the end of the world's happening. So, it's not a good time to go out and raise. And right now it's a pretty good time.
Yeah, 100% agree with that. I think, we sort of assumed going into COVID would be a slow market, sort of deal flow would trickle. But, this is sort of, the busiest we've been in quite a while. There's tons of early stage deals. And I think valuations also getting sort of frothier as time has go on, even compared to like, April or May, which is kind of crazy to think about. But we also do see some sort of later stage growth stage deals, but those tend to be sort of more exchanges and sort of CeFi type projects.
Something that addressing actually both of the previous questions. I mean, I personally feel there are too many crypto funds. The amount of market cap that you kind of need in an asset class to sustain able to make enough management fees to be able to survive on there's not enough capacity in this asset class for the number of crypto funds that are out there. But at the same time, it's much easier to start a crypto fund now than it used to be. I mean, I remember in 2015, 2016, we had to teach auditors how to audit this asset class. They'd never done a crypto fund before. Grant Thornton, Horwath Mac, many others. We had to teach administrators, fund administrators how to do it. It was hell to get a bank account. And next, your banks were constantly saying, oh, we're no longer crypto friendly. So you'd have one bank after another closing. So now it is phenomenally easier to start a crypto fund. But I think people fund, do they have enough critical mass to have that fund be able to manage profitably? Do they really have an edge? Because if you don't have an edge, you can't generate alpha, and that's what investors are looking for. In terms of deal flow, I'd say the quality of deal flow, there's a lot less noise deal flow. There's a lot less of the kind of garbage that we saw that was following the kind of that insane bull market. Now we're starting to see sovereign entities actually preparing to issue digital securities. Okay, it's on permissioned private chains, but at the same time, that's a huge leap forward, right? So I think seems to have improved, and we're going to start seeing different types of deal flow, whether you classify digital security or a bond that uses digital ledger technology for custody and settlement as crypto is one question, but we are seeing higher quality deal flow in general.
Zach, I'm optimistic that you think the auditors are like have crypto figured out, because I think this year is going to be fun for a lot of them with sushi and all this stuff happening in DeFi. So let's circle back at the end of the year and see how the auditors have done. To your point about like enough capacity for the asset class, I do think there is enough for like the funds that have raised already. Especially because there's like the liquid side of the market. So even if you've raised too big of a fund, I mean, you can always deploy into things like Bitcoin and Ethereum or the derivatives and run a strategy there as well. So I mean, I think we're starting to see the traditional hedge funds actually putting together pretty big books, like mostly built around Bitcoin.
Yeah, and on the venture side, I guess I kind of agree with both of you, different parts of it. But we're tracking about 70 closed-end venture funds, but the median size is only like 35 million, right? So there are some larger funds, of course, but generally speaking, they tend to be pretty small, especially by venture standards. So, there's definitely in the years to come, it'll be interesting to see, how scalable are, 70 blockchain-focused venture funds. And I think you'll see a number scale, a number stay pretty small, or just unsuccessful in being able to scale given the current opportunity set, although at the same time that's growing quite a bit every year. So at the same time, I think that's good for investors. I mean, small funds typically lead to better returns and the opportunity to kind of provide true outsized returns for venture, for LPs, limited partners, not liquidity providers, of course. So all in all, I actually don't think it's a bad thing from that perspective.
Great. And with kind of all of those, as Curtis had mentioned, there's all of these, investable, assets. If somebody wanted to do Bitcoin or Ethereum or, something else, there's a lot of different things for people to actually invest in. Do you think that makes it, easier or harder to find something to invest in because there are all of these things that are available out there?
I think it makes it much harder because now you're trying to find a needle in a much larger haystack. I think, one of the best returning investments or assets this year has been Wi-Fi, and I think many crypto funds were not set up to monitor the developments in that space, to farm it or to purchase it if that was available. And so you're not only just looking at traditional equity deal flow, you also have to understand sort of early stage token sale deal flow, but also a lot of these public tokens and being able to acquire those by however they're actually being distributed. So it just seems like the number of projects and the number of sort of channels and venues you have to monitor has increased substantially. So even contrasted to 6 months to a year ago, it feels like there's a lot more activity in the market.
Yeah, I would agree with Tom. It makes it harder, but I think it's also good in that it allows for specialization. So, one of the things is like, if you start to say like, we could invest in every single asset, in this under the sun here, you're just going to get decision fatigue. And so certain funds should just focus on what they can do best. And like, we're starting to see funds that focus purely on like DeFi arbitrage opportunities, or ones that focus purely on the carry trade in centralized finance, right? So I think that's good. Just know your limitations and don't try to read everything in crypto, because your head will explode pretty quickly.
Yeah, and I think it's a sign of maturation of the market, the fact that it's big enough that you can't keep track of everything going on, and you need to have more specialization, even within a relatively niche area, in order to truly track everything that's going on and be successful. So I think you'll see more and more of that going forward.
Yeah, great. And is it accurate to say that DeFi is growing kind of more in popularity over some of the other assets? And if so, what are kind of the drivers for that?
Yeah, I mean, I think just if you look at returns since the beginning of the year, clearly, DeFi has emerged as sort of the leader in this space, in part just because we're looking at different orders of magnitude in terms of market size. DeFi is still very small when you look at the tokens and AUM compared to a larger, more mature asset like Bitcoin or Ethereum. So from a percentage basis, of course, it's going to be easier to grow. But I do think we've sort of hit like an interesting inflection point where all of the projects that people are using and getting excited about have been around for a while, maybe a year and a half, 2 years. But for a number of different reasons, both because of the sort of the macro tailwinds I mentioned earlier, but better tooling, more liquidity, a number of sort of innovations in the way developers can build these protocols and bootstrap them and fund them. Everything is sort of aligning to allow this market to expand more so than it has, even in the past year. And so I think a lot of people are excited, even have been DeFi bulls for a while, including ourselves, but even more so going further, it seems like we sort of hit this right alignment in this Kepler equation.
Yeah, I think we've gone one step up the ladder in terms of market infrastructure for DeFi. It's still very early though, because you have funds that spent maybe the last 6 months building out infrastructure so they could even participate in something like being a liquidity provider on Uniswap. But if you look at, say, like where the qualified custodians are in the space, like they're literally just cold storage solutions at this point. Like they don't allow for participation for anyone like holding a significant number of assets unless they're doing it themselves. And so I think that's going to be the next leg up on the ladder, is like someone like a Coinbase Custody or Anchorage, like allowing participation in a DeFi. That unlocks like another, couple of billion in assets just being able to participate. And then we'll probably see hopefully more of that, like with like Fidelity getting in. There's just like liquidity dominoes abound, right? And we just need easier ways for institutional players to participate. And then I think the total value locked in DeFi continues to go up. The other thing that was helpful is just better developer infrastructure. So now we have a bunch of audited building blocks across crypto, like governance modules, AMMs, and it makes it much easier to just like pull one of those off the shelf. And buyer beware on someone that pulls something off the shelf that they don't understand and add too many changes. But where we are right now is like you can pull some of the Legos off, and you feel pretty comfortable that some of those Legos are made of like steel instead of like plastic.
Makes sense. Well, as we're kind of closing out our panel time, I wanted to end with some predictions, including like what you see in the area of crypto and blockchain investments in, either 6 months from now or 6 months from now, and then, 5 years from now. And Zachary, do you want to kick us off here?
Sure. Months, I think we're going to see the first major corporates and sovereign, at least sovereign related entities, utilize DLT as a mechanism for issuing digital securities. We know of deals that are happening in the pipeline. In 5 years, I see a huge portion of the global securities market, particularly actually debt markets, utilizing hopefully permissionless, but certainly permissioned blockchains to issue, settle, trade, and is the backbone is actually currently a very archaic infrastructure.
Great. Curtis?
So I guess in the short term, I have more of a rain cloud over my head in terms of regulation, where I feel like the SEC has kind of gone down their list, and they started with the things that were like outright fraud in 2017, and now they're starting to go into more credible projects. And I don't know where that list ends, but I think there will be probably some negative press headlines around projects that we all think are like very high quality, like ended up doing something that the SEC was not happy with. I think in the longer term, with crypto, I feel like we have this sort of like Maslow's like hierarchy, and like we've started now with like easy fiat on-ramps and regulated exchanges for people to get access to Bitcoin and Ethereum. And I think next up on that hierarchy is scalability. So right now we're like running into problems with gas prices on Ethereum. So it's limiting participation. So I think we're going to see like a lot of meaningful improvement there in the next 6 months to a year. And then above that, I think you start to have like privacy becomes more important, where like the more assets you have in crypto, the more likely you actually don't want everyone to know what you're doing. You don't want to like leak edge. And so I think privacy we'll start to see like more research happening there. And then the last one is like decentralization. Like, scalability probably pulls against decentralization a little bit. And I think we always need to be pulling back toward the decentralization part of the pyramid, because without that, like the whole thing kind of falls down. So I think you're going to see like meaningful changes there, like either on the mining side, like with Bitcoin, like we're starting to see more miners crop up in the US to like offset China a bit. And then like proof of stake systems like ETH2, I think is very exciting for decentralization. So I'll stop it there. There's a lot of predictions we can make.
Thank you. Yeah, Brooke?
I mean, 6 months from now, I share the same question on the regulatory side. I'll be very curious to see who the new SEC chair is, given Jay Clayton likely won't be in 6 months. But that's more of a curiosity, I'd say, than a prediction. Really, I'm just hoping my kids are back in school in 6 months, so fingers crossed on that. But looking at 5 years, I do think we will see more non-crypto companies look at tokens as a way to potentially bootstrap network effects and bootstrap usage in unique ways. And I'm not talking big corporates and stuff like that within a 5-year time frame, but I do think we'll see a lot more creative ways of companies trying to figure out, okay, how do we grow? How do we use new technology to grow? Looking at that as a way to do so, and potentially a large number of kind of new tokens from really non-crypto companies who see the inherent benefits of that.
Great. And Tom, close us out.
Yeah, I think I agree with pretty much everything that's been said so far. So trying to think of some new stuff. I think we're currently sort of seeing another wave of quote unquote ETH killers crop up, and this time with sort of this flavor of trying to be an L2 to Ethereum. And I think again, these will most likely not work when they come to market. They'll fail to get community mindshare, developer mindshare. So I think as we see these launch over the next few months, there'll probably be a similar result to what we saw in sort of 2018 and 2019, especially given that that's when the vintages of those assets. I think zooming out, I think it's a repeat of a lot of things we've been saying over the past 30 minutes, where I think the macro tailwinds sort of favor the rise of crypto assets like Bitcoin. I think the path forward for Ethereum and for DeFi is very clear, where this thing continues to scale, continues to get more developer friendly, continues to go more mainstream, become more user friendly. And also continues to get more sort of real flows onto these protocols, where people are actually using these things for real business needs, for real use cases, and actually using them to integrate into a global financial system. So on the long term, very, very bullish on the space.
Great. Well, thank you to Tom, Brooke, Curtis, and Zachary for joining us today, and thanks to everybody for joining in on the panel. Thank you so much.
Thanks, Christine.
Cool.
Thanks, Christine.
Thanks, everyone.
Cheers.